Gold just crushed the stock market. In 2024, gold returned 27%, while most investors sat in index funds, making less. But here's the thing, that doesn't mean you should dump everything into gold. Today, I'm breaking down the three biggest asset classes: gold, stocks, and real estate, with real 2025 numbers. By the end, you'll know exactly where your money should go.
Let's start with gold. Gold returned 27% in 2024, its best year in over a decade. Central banks bought over 1,000 tons for the third year straight. China, India, Poland, they're all hoarding gold like the financial system is about to crack. And honestly, in a world of inflation, wars, and currency devaluation, gold makes sense as a hedge. But here's what gold bulls won't tell you. Gold pays zero dividends, zero income, zero cash flow. You're betting purely on price appreciation. Over the last 50 years, gold averaged about 7.7% annually. Not bad, but stocks did better.
The S&P 500 has averaged 10.3% per year over the last 50 years. With dividends reinvested, that number jumps to about 12%. Here's what that means in real money. If you invested $500 a month into an S&P 500 index fund starting at age 25, by 55, you'd have over $1.1 million. That's the power of compound growth. But stocks aren't perfect. In 2022, the S&P dropped 19%. In 2008, it crashed 38%. If you panic sold either time, you locked in devastating losses. The stock market rewards patience and punishes emotion.
Real estate, everyone's favorite safe investment. The median U.S. home price hit $420,000 in 2025. Over the last 30 years, home values appreciated about 4 to 5% annually. Add rental income of 5 to 8% yield, and you're looking at 10 to 13% total returns. Sounds amazing, right? But nobody talks about the costs. Property taxes, insurance, maintenance, vacancies, property management, that eats 30 to 40% of your rental income. A $100,000 rental property generating $12,000 per year in rent might net you only $7,000 after all expenses. And you need $60,000 to $100,000 up front for a down payment. That's not starter money.
So let's put them head to head. For returns, stocks win long-term at 10 to 12%. Real estate is close at 10 to 13% with rental income. Gold trails at 7 to 8%. For risk, gold is the least volatile. It barely moves during crashes. Stocks swing wildly. Real estate is illiquid. You can't sell a house in 5 minutes. For income, stocks pay dividends. Real estate pays rent. Gold pays nothing. For entry cost, you can start investing in stocks with $50. Gold ETFs, same thing. Real estate, you need tens of thousands.
Here's what the smartest investors actually do. They don't pick one, they use all three. The proven allocation: 60% stocks for growth, 30% real estate for income and stability. Start with REITs if you don't have $100K for a down payment, and 10% gold as your insurance policy against chaos. If you're under 35, lean heavier into stocks. You have time for compound growth to work. If you're over 45, shift more toward real estate income and gold stability. The worst thing you can do is pick one asset class and go all in. Diversification isn't boring. It's how millionaires actually stay millionaires.
If this breakdown helped you see your options clearer, subscribe. I put out new investing insights every single day. Drop a comment and tell me, which one are you going heaviest on? Gold, stocks, or real estate? I'm curious what this audience picks. See you in the next one.